Now, if you clicked this video, you're probably one of those traders that has lost so much money from the Forex market trying out multiple trading concepts like ICT, trading indicators, Forex patterns, and so much more just to try and make money from the Forex market. I got you. In today's video, I'm going to be explaining to you the easiest Forex strategy, which is demand and supply, that even a 2-year-old can master and make money from the Forex market, guys. And to show you how simple demand and supply is, look at this trade that I caught. Literally, I'm currently floating $7,000 profit from this trade that I took off my supply zone. As you can see right there, price bounced off my supply zone one time, and then when it came back here, I took my massive trade, guys. And you can see I'm floating profits. I'm going to be showing you how you trade demand and supply the correct way. So if you're new around here, please make sure to subscribe to this channel, turn on the notification bell so that you never miss out whenever we post a video. Let's get started. Now traders, if you are new to trading and you're wondering what is demand and supply in Forex trading, demand and supply in Forex, these are zones. So a demand zone is a zone in the Forex market that causes an upside move, and a supply is a zone in the market that causes a downside move. So we need to master three things. How do we identify demand and supply zones? How do we mark them? And how do we trade them? So let's get started. Now traders, we're going to be looking at this chart. This is our gold chart, 1 hour candle. As we said, demand is a zone in the market that causes an upside move. So this zone right here, we can see it caused this upside move, and this upside move right here, as you can see, we have price going up aggressively, and it's giving us big green candles. Remember, big green candles are bullish candles or buyers. So you can see we have here buyers go up aggressively, indicating that the zone where price came from is a demand zone. So now, why do we really need to trade demand? Demand, we trade it because anytime when demand happens in the market, it's going to always leave the market unbalanced, and price has to come back to balance the market again. Because anytime when this zone causes this upside move, it's always going to leave what we call fair value gaps. Fair value gaps are always sufficient price action, and these gaps have to be filled. So we always love to take two types of trades whenever we are trading demand or supply. So the first trade, we always want to take it when price is going to reverse back to come back to our demand zone. So you can see I drew my blue line because price was forming this support zone right here, and it had to break it. And remember, we only sell off when support is broken and price closes below our support, as you can see right there. So my first trade, I was taking it, targeting this fair value gap. With demand and supply, you can always hit two birds with one stone, as you can see. So the first trade is when price is coming back to the demand zone. Now, since price has come back to the demand zone, now we want to now buy off. Remember, this market was unbalanced. Now we are trying to balance it, as you can see. So when price comes back to the demand zone, which is this one right here that caused the upside move, we need to understand that it's always smart money in play. Smart money is the ones that cause these big moves. We can never see retail traders causing these big movements like this in the market. Meaning, when price comes back to the demand zone, it's going to tap in and then go back up. So we always want to take our trade when we have confirmation. As you can see, we have confirmation from we have two bottoms. Twisted bottoms is a reversal candle pattern that indicates that price is going to reverse. So when I see this, I take my second trade. I take my trade exactly up here, putting my stop loss just below here, just like this, as you can see. So as I mentioned, we want to see price come down, tap in, and then go back up, as you can see. And remember, as price was dropping here, it also left fair value gap in the market. So this fair value gap right here would be my initial target. As you can see, literally the price hits it and then probably reverses and goes wherever it wants, but after taking out my targets. So traders, this is the demand zone. Literally, you are hitting two birds with one stone. You can see we have price coming back to the demand zone, and then we have price going back after hitting my demand zone, going back up to take out another fair value gap, guys. That is how we trade demand. Now traders, before I go any further, FirstBull, the most transparent trading platform that I use to see my economic data, has a trading contest, and there are so many prizes to be won, up to $22,500 to be won. Registration starts on the 15th of this month and it ends on the 16th of next month, and the trading contest starts on the 16th of next month and it ends on the 30th of next month. So make sure to go register right now. All you need is to sign up for a FirstBull account, guys. Literally use the link below this video and get that account. There is a lot of money to be won. Now the cash prizes for the 10 top participants range from $10,000 up to $100 for the 10th winner. So traders, make sure to go sign up. Now if you want to know the trading rules are right here. Click here on the rules and then you're going to be able to go through the trading rules. As you can see, eligibility: all FirstBull registered users aged 18 and above are eligible to participate in the contest, guys. The system will automatically create a demo trading account for you upon registration, guys. So make sure to go and sign up. And trading rules, profit and loss ranking will be used in this contest, guys. So make sure to go through the rules. As you can see, as I mentioned, there is up to $22,500 to be won. So guys, take advantage of this. Make sure to sign up with FirstBull right now and join this. You never know, you can be the lucky winner of the $10,000 grand prize. Now traders, since you know what demand is, now let's look at supply. Where is demand? There must be supply. So a supply zone is a zone in the market that causes a downside move. So we have this zone right here that causes this downside move. As I said, a supply zone has to be characterized by consolidation first. So this zone right here, you can see some consolidation, and then the downside move that was caused, we need to see big candles dropping to the downside. So we have 1, 2, 3, 4, 5, 6 big aggressive candles that are bearish or sellers to the downside, as you can see. And then to make things more sweet, remember, we always want to target one bird with two stones. We want to see fair value gap, because remember, the fair value gap is what we want to aim for when price is coming back to our supply zone. So we have this right here, as you can see. We have this fair value gap and this one in here. So now we need to know when is price going to come back up here. So we have this resistance that was formed here, and then price has to also, there is another one that was formed right here. But currently down here we can see this big red candle, and then we have a massive green candle, indicating that this is bullish engulfing candle. And also when you look closely, we have this slanting edge right here, indicating that this is now more of a divergence. Remember, a divergence is a reversal sign, indicating now we have to see price reversing. So what I do, I always mark out this blue line, which is my resistance. So I want to take my trade when price breaks and closes above right here, but also I can take my trade from down here, since I already have this confirmation of the bullish engulfing candle. Take my trade, putting my stop loss just below here, targeting this fair value gap right here as my target. Again, this is always the first trade that I want to take, because everyone ignores this trade. No one wants to take the trade right here. And I wonder why people are so afraid to take this trade. This is one of the easiest trades to take. As people are waiting for price to come back here to bounce off, me, I take always or maximize off the trade that goes back to the supply. Now, point of interest that you are waiting for is this supply zone right here, because this supply caused this downside move. Now price has come back here, but remember we said it's always smart money in play. What is smart money? Banks. So it's always the banks that cause these big movements in the market, and it's always the banks that drag back the markets here to make the markets balanced. So here the market was unbalanced because we have some fair value gap, but now here price has to come back up here to balance the market. Now you can see price taps into our supply zone 2 times, indicating that this is a double top, as you can see. So what is a double top? A double top is a reversal pattern to the downside. Here we had more of a falling wedge, you can see. So if I'm to draw a line here and here, this would be a falling wedge. Now here, for falling wedge, you tell me that price is going to reverse back. Now here we have a double top that tells me that price is going to come back down. So here I take my trade exactly down here, putting my stop loss above here and targeting again fair value gap, as you can see. So if you can see, there is a lot of similarities between demand and supply. When price is going up, it's leaving fair value gap. When it's coming back down, it's leaving fair value gap. Literally, that is how you trade demand and supply. So if you enjoyed this video, please make sure to test out this demand and supply strategy onto your accounts before you apply them onto the live account and see if they work for you. So God bless you, and I'll see you in my next. Peace.